Tesla price cuts dent other auto stocks as margin concerns arise. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today has been quite an interesting one for the world of EV, and a lot of it is coming down to Tesla. So that is what we're going to be speaking about today. We will briefly speak about the broader EV market, what certain companies are doing, because there's quite a few weird things happening. A couple of things I spoke about yesterday in regards to Lucid and ChargePoint are coming true to an extent as well, so we're going to touch on them towards the end of the video. But the primary thing we want to speak about is this Tesla cutting prices largely just to qualify for the $7,500 EV tax credit under the IRA. So there's no real need to panic, in my opinion. There is mixed opinions on this from analysts and, investors alike across the board. So we are going to discuss it. So right before we get into it, could I please ask you to hit that juicy like button nice and early for your boy? Helps me out a lot. I appreciate all of the support on the channel as of lately. And if you end up enjoying this video, subscribe for more content. Why not, baby? It's free. So Tesla fell in early trading on Friday after unveiling significant price cuts in the US and Europe. The price cuts range from 6% to 20% for Model 3, Model Y, and various performance models. So the reason this is happening is looking for sales rebound by cutting prices in the US. So they slashed the prices for the vehicles sold, which will make them eligible for the $7,500 US government tax credit. Now, between that tax credit and these price cuts, Tesla has just opened themselves up to a huge pool of buyers who wouldn't have been able to consider them at previous price points. So we would really hope that over the next few quarters, we will see Tesla's sales numbers rebound very strongly. Now, the US EV market isn't in the strongest place it's been for quite a while now, so it's tough to know if we're going to see the benefits of this anytime soon. But we're going to have to wait and see. And obviously, there's a lot more logistics to take into account when we see a headline like this. Again, margins are going to change. They're going to be down. It's going to be a little bit of a weird one. This step is the big first move by the lead executive for China and Asia, Tom Zhu, who was just appointed to oversee US output and sales, essentially becoming second in hand right behind Elon when it comes to the running of Tesla. The cost of the baseline Model Y crossover was cut by nearly 20% to $52,990, not including certain fees, putting the vehicle behind the $55,000 cap that buyers have to be under to receive the EV tax benefit. So again, $7,500 is a lot, and again, that price cut is huge as well. People are saving 5+ figures strongly on these EVs now. It's quite insane. The company also cut the price of the high-performance version of its Model 3, which now costs $53,990, again putting it just below that necessary price range. So some very, very considerable cuts here, okay? Wedbush Securities analyst Dan Ives expects an initial negative reaction to this development, which, I mean, we have seen today. Tesla is currently down about 2.4% on the day, but thinks it is the right strategic move by the electric vehicle maker and some cracks in demand. And I mean, if you just think about it logically, guys, we're finally seeing a little bit of slowdown in regards to growth in the US here. This really, really could be the thing to make it shoot back up again, which ultimately is what investors want to see. We want to see every vehicle that's being produced to be sold as quickly as possible. And we want to see sales numbers going up constantly and continually. That really is all we as investors can ask for. Tesla now has global sale. Austin, Berlin, further China build out. It didn't have a few years ago and has margin flexibility to make aggressive moves like this to gain further market share in the EV arms race. And that's true. Again, people are obviously going to look towards their margins now and the fact they're not going to be as good, but they have wiggle room that they maybe didn't have 5 years ago. They have that room there now. And this was always part of what Tesla set out to do. They started off expensive, they introduced cheaper models, and now some of those expensive models are going to become a little bit cheaper and more available to the public yet again. So now they are all there. They can all get that tax credit. It's going to be awesome for the company, in my personal opinion. Now, the thing is, this is coming out the day after we got another poor enough piece of news in regards to Tesla. Poor Tesla has been fighting it. They finally rebounded from that $100 mark, went up, consolidated at about 120. And now, to be fair, after an initial sell-off, they're still right around that level. So, investors haven't taken it too harshly. But they fell yesterday after a report indicates Shanghai plant expansion is delayed. Now, this is a relatively big deal. But again, it's not a reason for Tesla to go to the ground. It's not a reason for Tesla to sell off to any sort of insane levels. Now, what are analysts saying in regards to the outlook for Tesla amid price cuts? Now, there are, as I said, mixed opinions. Obviously, when something like this happens with Tesla, everybody speaks about it. Every big analyst does because so many are covering them. They really are. So the first one here, heading into a challenging backdrop in fiscal year 23, we believe Tesla had to decide whether to sacrifice volume growth or gross margins, and based on price and action, the answer appears to be gross margins. And again, I think that's absolutely fine. This creates a difficult narrative for a stock still trading at about 30 times our fiscal year 23 estimates, which we now forecast to grow at a 10% CAGR over the next 3 years. I don't think 10% is right whatsoever. People may disagree, but I think even in this climate where sales have generally been down across the board in the US, I think we're going to see more than 10%. And I think nearly any Tesla bull will agree, and even some Tesla bears will agree that that compound annual growth rate is not going to be accurate. So again, Tesla pricing actions taken yesterday are a negative for all OEMs and lowers the overall profit pool in our view. And yet potentially it does, but from a consumer standpoint, it opens it up. And again, more people may now be willing to buy an electric vehicle. I know there's a lot of people out there that have a lot of love for Tesla, even if they're not investors. When it comes to picking an EV, they're only interested in a Tesla. And again, there's a lot of people there who wouldn't have been able to afford one, who now may be able to. So we might not even see a considerably lower overall profit pool. It's tough to know. And again, when you look at Tesla's share of the market compared to where it was even a couple of years ago, it's not going to affect it as heavily in general now. I don't really think that's a very, very strong point. Now, they also assigned an $89 price target and a downgrade there, so you can see a relatively bearish outlook all in all. And similarly, Everscore ISI noted that while a steep discount will help sustain demand, it will have a significant impact on Tesla's near-time gross margin. So you can see that any analyst who's coming out realistically is just speaking about that gross margin going down, which it will. Not all analysts were pessimistic. Wedbush and Morgan Stanley advised clients that the steep price cuts are a way for the Elon Musk-led company to flex its muscles and put pressure on competitors. And that's a fact. And again, guys, for Tesla, they're losing market share as time goes on because there's so many more competitors. They are in the position that a lot of these companies aren't, where they can cut costs. I mean, cut prices. You know, they're in a position where they can do that. In an environment of EV deflation, we believe Tesla's strong balance sheet, cost and technology leadership, and scale will be critical to solidifying their competitive advantage. Within a painful reset of EV expectations globally, which we have all gone through over the last year and a half, we see Tesla as a winner and reiterate our overweight rating. So, you know, some mixed opinions there. Me personally, I'm of the opinion similar to Adam Jonas, where they can afford to do this. You know, they can do it. They can get away with it. It's not going to ruin their business. They're one of the few EV companies out there realistically who can do it. So I think it's going to be a good thing for the company overall. Now, it undoubtedly has had a bit of a knock-on effect on the EV markets today. A lot of companies were doing worse than they are right now. We're getting towards the end of the trading day, and a lot of companies have rebounded 1% or 2% at the very least. We can see ChargePoint, very, very happy. If you watched my video yesterday, I want them to stay above this 1130-ish line. They managed to do it today, despite some pre-market trading going down below there. They're looking quite strong. You see it with Lucid as well. Everybody was really down another few percentage points from where they are now. There's a bit of a rebound happening, so it may well not be the be-all and end-all that a lot of, you know, the FUD-type articles are thrown out there right now. And again, I think there's a lot of positives to be taken away from this. I'd be very interested to hear what you guys have to say, so let me know in the comment section. Do you think this is going to be an overall good or overall bad thing for Tesla? And let's say the short term and the medium term, because again, I think I've made my opinion clear. I'm interested in hearing from you guys. If you watched this video all the way till the end, only a quick one, but still, my friend, you are a true legend, and I really appreciate you. From the bottom of my heart, your support means the world to me. If you did enjoy, again, all I ask is you hit that juicy like button and subscribe for more content. We are sticking with these daily uploads, baby, and it's because of the support from you guys is keeping me going. Anyway, guys, I hope you all have a beautiful, blessed day. I hope you all have a fantastic weekend as well. Hopefully, the stock market treats us all well going into next week. And hopefully, some of our EV stocks can continue to go up. Again, some crazy movers. Here's hoping it continues. Anyway, guys, I hope you all have a beautiful, blessed day. I'll see you for another video very soon. Peace.